where we are trying to look at the driver of the forex market, what have been forming the candles. Why is it that all the time there is a candlestick forming? Who have been forming those candles? So those are some of the things that I'm interested in looking at today, which is the fundamental drivers, or so the fundamental drivers. So we are going to delve more into fundamental analysis today to try to understand the market from that perspective. So before we begin, I'll bring out the chart that we analyzed yesterday. So this is the chart that we analyzed yesterday. And I think I should share my screen. All right, so I believe you can watch my screen. So yesterday we looked at this chart and we were saying that this pair, as it is moving, what could happen is that the market is going to move a little up to deceive traders, as if this thing is going to come down and then shift up, take the stop loss of the traders that are here, and then trigger the entries of those who are selling for this market to sell. So what we are looking at today, which is the fundamental analysis, I'm going to take you through what is GDP. So GDP, I know most of you have heard it before. Gross domestic product. So GDP is actually the consumption or consumer spending plus investment in the country plus government spending, and then plus into brackets exports minus imports. So what GDP means is it is the average, or it is an approximate that gives an idea of the resources and services a country provides. So when your GDP is strong, it's as if your economy is strong. So when looking at your news, one of the things that you should be interested in is looking at the GDP. Okay, so for you to understand GDP, I made mention that you need to understand what? Consumer spending. So consumer spending, which means that when there is a news about consumer spending, you should be interested in it because consumer spending is directly proportional to GDP. So when consumer spending is increasing, your GDP will also increase. Number two is investment. When the people in the country are investing more, the economy will improve because it's directly proportional to the GDP. And then the third one is government spending. So if the government is building a lot of infrastructures, is spending a lot of money on developing the country, that is also directly proportional to the GDP of the country, which means that that will help the economy to be also strong, right? Then the last part, which is very interesting, is into bracket export minus import. So when you export more than you import, that will also help your GDP. So when you are looking at your calendar, what you are looking at is you are looking for consumer spending. Consumer spending counts in the form of CPI. So on your calendar, you see something like CPI, which is similar to inflation. Then we have investment. Investment, you might not see a lot of news about investment, but anytime maybe you are on Twitter, you are on your news, normal news, and then you've seen something about consumers about investment. An example, in Ghana, there was a time where individuals were afraid of investment because of the government trying to do a haircut, sort of. Because of that, people were afraid to invest their money into the economy. And what happened to the Ghana cedi? It depreciated because people were not investing into the country's assets. Then we have government spending. Government spending, that one is very tricky. The spending has to be for a developmental project, not that the government is spending without any mind, like you are just spending unnecessarily, because some spendings does not improve the economy. They are just liability. So you have to look at that. But the most important is the export minus import. So there are news that are released about export and import of goods from different countries. Now, the next thing I'll look at is inflation rate. Yes, so inflation is also very important. That's the how the country's the value of the currency have depreciated. You will know that by looking at the CPI values, which is the consumer price index values. When inflation is very high, it is very bad for the economy, which means that if you are using the US dollar for an example, then they've released an inflation data and the data is high. It means that the dollar should be weak, technically. So anytime they release an inflation data of a particular country, you are interested in looking at that data to see whether it is positive for the currency or it is negative for that currency. And then the next news that you should be interested in is interest rates. So when your interest rate is high, a lot of other countries will want to invest into your country because of the high interest, and they will get more profit from their investment. So a high interest country definitely will have a good strength to their currency. So we are interested in looking at the interest rates of the currencies that you are trading. And then another thing that is very important that you should look out for is unemployment rates. When the unemployment rate of the country is high, it is bad for the currency. When the unemployment rate is low, it is good for the economy. So you are looking at interest rates, you are looking at inflation, you are looking at unemployment, you are looking at CPI, you are looking at GDP. Okay, so we say when GDP is good for the currency. If CPI is high, it's bad for the currency. If export is higher than import, it's good for the currency. Inflation is high, it's bad for the currency. If interest rate is high, it's good for the currency. If unemployment rate is high, it's bad for the currency. Yeah, so these news are most of the time referred to as high impact news. But the US dollar has some other news that are very, they are serious that you need to look out for. And one of them is non-farm payroll. Yeah, so non-farm payroll is released every first Friday of the month. So every first Friday of the month at either 12 o'clock or 1 p.m., there is a non-farm payroll. It's a very high volatile news. So you want to be off the market after the news release. You come and do your analysis and then you place your trade. That makes it more exciting than you being in the news. When the news is released, that can be very problematic to you. So the next thing that you're looking at, apart from the non-farm payroll, is the FOMC. Or monetary policy meeting. So FOMC or monetary policy meetings are also very important news events. The reason is that whenever they are talking about monetary policy, they are actually talking about the progress of the country, some of the things they want to do, some of the things they don't want to do, what is the way forward. In Ghana, it's like budget reading. So our FOMC, the US FOMC is similar to reading of budgets when you come to Ghana. So with the FOMC, it's very important to pay attention to what will be released, and you are listening to whether they are planning on cutting the interest rates in the year ahead. That gives you an idea what they are planning. So let's say in a FOMC and you heard the Fed president saying that I am aiming to reduce interest rates in March by 1 point. Just the fact that he has mentioned it, traders are going to take advantage of the fact that that is the plan. And reducing interest rates means weakness to the currency. So if the monetary policy, they've already mentioned that they are going to reduce the interest of the currency, we traders will start trading it as weakness already from beginning because we already know what they are planning. Yeah, so you have to pay attention to all this news. Okay. Now, another thing is if you are not interested in our calendar, you don't like the calendar we have on our website, what you could do is you can visit any other website and go to some few of them for you to see. So you can actually go to Forex Street. Yes, so when you visit Forex Street, you can go to the economic calendar section, and under economic calendar, you will see, so go to under economic calendar, you come to economic calendar, then calendar. So you will see a lot of other news here. This non-farm payroll, this US CPI, this Fed, this Bank of England, Bank of Japan, Reserve Bank of Australia, Reserve Bank of New Zealand. So but what you are looking for is probably the calendar. So you just come and click on your calendar, and then after clicking on your calendar pops up. So this is your calendar here. You can filter your calendar to high impact news only. So you come to the down, so impact. So you just reduce it to high impact news only, and then you apply the filter. So after applying the filter, these are news from January 14th to Tuesday 16th. So I can change it to the week, the end of the week, which is Friday 19th, and I'll apply. Now, it breaks it down for us based on weekly. So now we will see that this horizontal harmonized index of consumer price, which we didn't talk about, so it's not very relevant to us. But the GDP, the British pound unemployment rate is 7 o'clock, which is very important. When I was mentioning the newses, I mentioned unemployment. So it means that you have to pay attention to British pound pairs on Tuesday, 7 o'clock. there's going to be a volatile news at that time. And then we have CAD, Bank of Canada Consumer Price Index, which is also very important on that Tuesday at 1:30. So at 1:30, the Canadian dollar is going to calculate or measure their inflation rate to see whether their inflation rate is increasing or not. Now, when you come to this side here, you will see that the previous inflation rate is 2.8%. If the new one that comes is higher than this, then it's bad for the country. So you can actually click on it to read. So when you click on it, they said that the Bank of Canada Consumer Price Index score released on by the Bank of Canada on a monthly basis represent change in price for Canadian consumers by comparing the cost of a fixed basket of goods and services. It is considered a measure of underlying inflation as it excludes 8 of the most volatile components: fruit, vegetable, gasoline, fuel, natural gas, mortgage interest, intercity transportation, and tobacco products. The year-over-year reading compare price in the reference month to the same month a year earlier. Generally, a higher reading is seen as bullish. So when a higher reading is seen as bullish for the CAD, for the Canadian dollar, whilst a lower reading is seen as bearish. So in this case, you have to interpret it. So a higher reading is seen as bullish, means that when you are trading Euro CAD, it should go up. Okay. Now, let's go to the next news event, which is China. China, there is gross domestic product in China, which is GDP. But we don't trade the Chinese yuan. We trade Japanese yen. So sometimes we pay attention to it because most people borrow from China, and China helps in the production of a lot of things. So we just pay attention to it, whether their economy is going on well or not. Then we have consumer price index for the US dollar as well on Wednesday, 7 o'clock. I am sure it's similar to one. I'm sure this New York time. Then Australia dollar, there is unemployment rate on Thursday. Okay, so you just have to pay attention to something like that anytime you are doing your trade or you are placing your analysis. You can do similar thing on our website. I'm just giving you other options. I'm not telling you that you have to go to my website by force. I'm just showing you the relevance of the things that are on that site, and you can benefit from it. So you can also go to Daily FX. So when you come to Daily FX, this is how it looks like. You can quickly go to the calendar section here and click on economic calendar. So the economic calendar, you can actually change the time. So right now the time is 00. Based on importance, I'm changing it to high impact only. And the time limit to Friday 19th. Okay. So we have GDP for Germany, 15th, which is Monday. And we have inflation rates for Germany. We have unemployment for England. We have inflation. So this one on the Forex Street, it's written as what? consumer price index, but here it's written as core inflation rate. So they are actually talking about inflation rate of the country. So let's read what they have here.
Now that it looks like the thing is not going, now that people are calling with a very urgent demand. Oh.
All right, so interest, they say in Canada, the
Mm,
core inflation
ah,
rate tracks changes in prices that consumers
it's
pay
true.
for a
If there are
basket of
other
goods.
hostels around, I can go, we talk to them. Mm,
So, um, I wanted to see the trading side of it, but I cannot see. Yeah, let's go to another site. So the next site is FF calendar. I don't know the site of it. So yeah, Forex Factory. So this is it. So with the Forex Factory, you can as well filter, change it to high impact. And here you can actually remove Chinese yuan because you don't trade it. You don't trade bond. This business surveys. Sometimes housing is also very important. So you can pay attention to housing. Now let's filter. So these are the news that are available. So on Tuesday, there is CPI for card. Now let's read for the CPI here. So CPI is change in the price of goods and services purchased by consumers. Actual greater than forecast is good for the currency. Release monthly. So let's go to the trading options. Consumer price account for a majority of overall inflation. Inflation is important to a currency valuation because rising price leads to central bank to raise interest rates out of respect for their inflation commitment mandate. So you see all this news. So when you are trading their pairs, then you have to come and watch. Okay. Now the next thing I want to do today is we will use what we have been learning so far to actually analyze another pair again so far to see how well our studies have been going. So I'm just going to pick a pair at random, or somebody can just mention a pair. Somebody should mention a pair. Okay. So I'll pick at random. No, I did JPY yesterday. Okay. So now this is euro against the Australian dollar. So I'll quickly move to my monthly.
Yeah, JK.
Yes.
You also have some of the listen on your website though.
The news.
Yeah, the calendar.
Yes. I showed it yesterday.
Oh, okay. All right.
So just making my line sticker. Yesterday, I explained to you that when you see a wig, it means what? There are a lot of monies there. So anytime you see wigs like this, there is a lot of money there. That's how come when the pair hits there, it has to drop. So anytime the pair goes there, there is going to be a reaction. So I'm going to mark all those wigs. because it's very important. Then I'll now come to where the price is currently. So this is where the price is currently. Okay. So this big black candle, what I want that will happen, I want the next at the end of the month, this green candle, sorry, because of this big black candle, this one too should close black. Because the momentum is high, meaning there is a lot of sellers here. What happened here is that the sellers that were selling took profit, so that the buyers are winning. So they will re-enter at a point in the month. And this big green candle will gradually change to be like this. At the end of the month, that's what I'm thinking. So let's go to our weekly. So on our weekly, what I can see is there is some monies here, but the pair moved to go and sweep it. So when to take those monies that was there. So the amateur traders would have sold there. They would have entered a trade here. Like they will be like a double top is forming. So like this, and they place their trade here and put the stop loss here. Then they'll push it up, clear their stop loss, and they try coming down. So now what we are going to be doing is from here, you can see that there is a double top here, and there's a break of structure, or the neckline is broken here. So what can happen is this pair moving up and then finally dropping. Now, for you to determine whether it will drop from where it is, you can use the weekly to know. So because the weekly candle was green, which means the next one too can be green to this place before a fall can happen. But then let's go to the daily and see what is actually there. I'm just using all that you were taught since we started. I'm not adding any new thing. So these are daily. So on our daily charts, first of all, let's look at the basic Forex. Yeah. So with basic Forex, so lower low, lower high, lower low. So kind of lower high, and then there should be a lower low. This trade will be invalid when the pair crosses this high here, which we all understood. So now let's go to our 4-hour to see if there is a trade option available for us. Yeah. So on our 4-hour, I think I should mark something. So I'm marking here, something like here. So let's go to 4-hour. Yeah, so on the 4-hour basic Forex, let's go. Lower low, lower high, higher low, higher high, higher low, higher high, buy, higher low, higher high, buy, higher low. So there was going to be a higher high, right? There will be a higher high to this place here. So when will you enter the trade? When this thing reaches this place and you see something like this, double top, and then the pair move to cross the top here like this, and then come down, cross this down here, and then move a little up, and then you can sell it till the downside. So all the time, this is what you are looking for as an entry technique. When you don't see this on a smaller time frame, you are not entering the trade. So this particular trade, there is no trade for us this week until we see something happen around this area, the red zone. All right, so the next Zoom section will be for question and answers. Thank you for today.